Many of you have asked me to do a video on Paramount Global, ticker symbol Para. This is a company that Warren Buffett actually owns, and the stock is pretty much a disaster. And I actually have a pretty good history with the company because I used to make videos on it whenever it was Viacom CBS, and I actually owned the stock around 26 or 27. Then I sold it somewhere around $30 or $31 per share, somewhere in early 2022. And then I haven't owned it since then. In fact, then I bought Warner Brothers Discovery and then I sold it, but I haven't owned Paramount or Viacom CBS in a while. So I'm gonna discuss it again in today's video, update you on some of my research. This is a very hard stock to value because the free cash flow is all over the place. The debt repayment is not, the best way I want to see it. The CEO, I'm not a big fan of. I'm going to discuss all of that in today's video and try to assign a multiple on this company to try to somehow assess the upside potential over the next 3 to 5 years if we buy Paramount at such prices. Now, most of you are familiar with the earnings report. It wasn't the best in the world. If you look at what they did in terms of revenues they missed. EPS was 9 cents per share versus 17 cents per share, an absolute disaster. But the biggest story was actually the dividend cut, where Paramount pretty much fell 28% on their dividend cut. They cut it from 24 cents to 5 cents per share. Now, this is actually the right move from the management, and this is normally when you want to buy those dividend stocks, is whenever they cut the dividend, because a lot of those companies, they have to get out of the stock. A lot of the dividend investors try to get out, and it creates an amazing buying opportunity. But I believe the management did the right thing. They should have actually cut it to zero. I don't know why 5 cents from 24 to 5 cents. 5 cents is nothing. They should have just cut it to zero. And I'm not sure why they didn't do it. Maybe because of some board members that like their dividend or whatever. I think they should have cut it to just zero because it's not necessary. They should use the cash flow to actually pay back the debt, because this is a $9 billion company with $15 billion of debt. So they should be paying back the debt. But the CEO doesn't seem like he has a lot of plans to, just pay back the debt. Most of what he's talking about the dividend cut, he said this will enhance our ability to deliver long-term value as we move towards streaming profitability. So he's not, trying to use this somehow cuts from the dividend to just go and, pay back the debt and save on interest expense. He's trying to go again all in on streaming profitability. And it used to be only streaming, which is one of the reasons why I got out of the stock. He was all in on Paramount Plus and, Pluto TV, and those kind of platforms, especially Pluto TV, are actually a huge success. They did deliver a lot of numbers, but it's just not profitable. And the profitability has been getting worse pretty much every single time, which is why I ended up going to Warner Brothers Discovery, because the CEO was saying that they don't want to win the streaming wars. They are focusing more on theatrical, more on TV stuff, on movies that are actually profitable, not just all in on some kind of direct-to-consumer product, which is not very profitable. And I'm not saying how it's going to become such a profit machine for something like, Paramount and Paramount Plus in general. So yes, maybe the CEO is intending to use some of the cash to pay back the debt, but all he has in his mind is streaming. And this is not something I'm a fan of, with the company. If we look at the debt that they have, it's actually not bad at all in the short term. They can manage 2023, they can manage 2025 around 553 million, 795 million. They can manage it into 2026, maybe into 2027. And then they're gonna run into some big, debt repayments in, 2030, 2036, 2040, which is, further down the line. But most of their interest expense, some are 7.8%, 4.5%. They have some at 3%, 4%. So it's all over the place, but it's not like all locked in at 2 or 3%. They also have some variable, interest rates on a lot of this debt. And we look at the balance sheets, they have around 2.1 billion of cash, which actually means that they can manage this debt shorter term. But if I was Paramount, instead of just going and trying to grow, I would pay back the debt first, deleverage, save on interest expense with 15.5 billion of debt, which is more than the entire market cap. The market cap is like 9.8 billion or something. So this is what I would be doing if I was the CEO. I would pay back some of the debt, and then I would focus on streaming profitability, but I would not put streaming first and then put the balance sheet last. Now, something that they are doing, which I'm actually a big fan of, they are trying to tap in some assets, underperforming assets. Like this asset, they are trying to sell between 2 billion to 2.5 billion. They might not get this much for it because they tried to sell it in the past, but this is still a good initiative because the company has a lot of IP. They have a lot of valuable assets like Top Gun Maverick, which was a huge success. It delivered over $391 million of just profits in 2022. It got a lot of people signing up for Paramount, and then it got a lot of publicity. It was very popular. Even in theatrical, it was pretty popular. I used to go around and see the theaters just full of cars, people wanting to watch Top Gun Maverick. This was a huge success for them. And if they focus on more such things and just all in on just streaming on some underperforming assets, I think they could do amazingly well and flip the company around. And in terms of the valuation for Paramount, as I said, it's very hard to value because the free cash flow is all over the place. But a very popular board member, Sherry Redstone, bought around $2.5 million worth of stock at 15 per share. And if we look at the history, it's been a long time they haven't actually purchased shares in the company, and this person bought around 165,000 shares, or around 2.5 million on, May 16, around $15 per share. So this was actually show us that some board members are saying value in Paramount around $15 per share. And I think there's a lot of fear on the company. There's a lot of pessimism around it. If you just look at something like a price to book, which we have to look at the price to book because they have some intangible assets that we can't just value like, cash or property and equipment, but the book value per share is pretty much less than half. It's one of the lowest ever for Paramount. It traded as low as 24. Now it's around 44. And there's a lot of pessimism around the company. And I think there might actually be, an opportunity here. But the way I'm going to value, Paramount in this video, and this is not something that I normally do with such companies, but because the free cash flow is very hard to estimate, we can put in all kind of work trying to do a DCF. We're not going to come up with a better numbers than the analysts are going to come up with. And these are the estimates from analysts, around 18 analysts, that they are trying to actually look at the free cash flow potential for Paramount. And if we look at the free cash flow trend from 2020, it has been declining. It was 1.9 billion. It went to 600 million, and it went pretty much negative in 2023. And 2023 is expected to be their worst year, which is what we want. You normally want to buy at the worst year and sell at the best year. And this is an inflection point for Paramount, where they are expecting the free cash flow to start getting much better in 2024 and reaccelerate up to $1.3 billion in 2026. Now, this is a big jump from negative free cash flow in 2023, which is why I believe this is more than a conservative number for something like Paramount. I would not be betting on something higher than this number. And if I just look at where, Paramount is trading at with all the kind of debt, and if they pay down some of the debt, I would personally not be willing to pay more than 10 times free cash flow for something like Paramount. There's amazing businesses right now with less debt and less uncertainties at Paramount are trading at 10 times free cash flow. So if we take the $1.3 billion estimate for 2026 and we take it on 10 times free cash flow, this is a $13 billion market cap. The current market cap is somewhere pretty close to around $10 billion. So this is more than 30% on the upside for Paramount over the next pretty much 3 to 4 years. You could say 3 years into the end of or mid 2026, which is actually not a bad upside at all. And I would not be willing to bet on 15 to 20 times free cash flow. I would not be willing to bet on the company going much further from negative 876 million to a positive of 1.3 billion in just 3 years. I think this is more than a conservative number. And it's actually maybe the worst case scenario, which is 30% on the upside for Paramount. Now, for me personally, I don't think this is a bad upside at all. But if I'm looking at other opportunities in the market, there's a lot of stocks that are going down. They have the same upside as Paramount with less debt and less uncertainty. So for me personally, I am not buying Paramount at such prices. It doesn't mean that the company can't go up. It doesn't mean that just the stock is not going to recover on some kind of a short squeeze and it goes to, I don't know, $18 or $19 2 weeks from now. And then you could write comments trolling me in the videos that I marked the bottom. I'm just looking at the financials. It's not making sense to me. I think there are better opportunities in the market. If we were at all-time high on the S&P and all stocks were at 52-week highs and Paramount was trading at 14, I would say, yes, this is a pretty good opportunity. I'm buying Paramount. But looking at Paramount, comparing it with other opportunities, I'm not saying how Paramount is better than other companies. So thank you for watching the video. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.